Hi everyone, my topic for today is standard costing, and the various parts that I'm going to cover under it are meaning, steps, advantages, limitations of standard costing, and I will be comparing standard costing versus budgetary control. Meaning of standard costing. Standard costing is a costing method that is used to compare the standard cost and revenues with the actual results in order to arrive at the variances along with its causes, to form the management about the deviations and take corrective measures for its improvement. Standard costing is defined by ICMA, which is the Institute of Cost and Management Accountants. Terminology as the preparation and use of standard costs, their comparison with actual costs, and the analysis of variances to their causes and points of incidence. Standard costing is a method of ascertaining the costs whereby statistics are prepared to show the standard cost, the actual cost, and the difference between these costs, which is termed the variance. Steps of standard costing. There are 5 steps under this. The first one is establishing standards. Second is determination of actual cost. Third is comparison of actual cost and standard cost. Fourth is determination of causes, and fifth is disposition of variances. The first one is establishing standards. First and foremost, the standards are to be set on the basis of management's estimation, wherein the production engineer anticipates the cost. Basically, in general, while fixing the standard cost, more weight is given to the past data, the current plan of the production and future trends. Further, the standard is fixed in both quantity as well as costs. The second point, determination of actual cost. After standards are set, the actual cost for each element, that is the material, labor, and overheads, is determined from invoices, wage sheets, account books, and so forth. Next, comparison of actual cost and the standard cost. The next step is to compare the standard cost with the actual figures so as to ascertain the variance. The next is determination of causes. Once the comparison is done, the next step is to find out the reason for the variances and to take corrective actions and also to evaluate the overall performance. The last step is disposition of variances. The last step to this process is the disposition of variances by transferring it to the costing profit and loss account. Standard costing can be helpful in ascertaining the profitability of the business at any level of production. Further, it is also useful in practical management functions, that is planning and controlling. Now we have the advantages of standard costing. The first one is improved cost control. Now, companies can gain greater cost control by setting the standards for each type of the cost incurred and then highlighting exceptions or variances, instances where things did not go as planned according to them. Variances provide a starting point for judging the effectiveness of managers in controlling the costs for which they are held responsible. The second point is more useful information for managerial planning and decision making. When the management develops appropriate cost standards and succeeds in controlling production costs, then the future actual costs should be close to the standard. As a result, management can use standard costs in preparing more accurate budgets and in estimating costs for bidding on jobs. A standard cost system can be valuable for top management in planning and decision making. The third is cost savings in record keeping. Although a standard cost system may seem to require more detailed record keeping during the accounting period than an actual cost system, the reverse is true. Like for example, a system that accumulates only actual costs show cost flows between inventory accounts and eventually into cost of goods sold. It records these varying amounts of actual unit costs that must be calculated during the period. In a standard cost system, a company shows the cost flows between inventory accounts and into cost of goods sold at consistent standard amounts during the period. It needs no special calculations to determine actual unit costs during the period. Instead, companies may print standard cost sheets in advance showing standard quantities and standard unit costs for the materials, labor, and overhead needed to produce a certain product. The last point is possible reduction in production costs. A standard cost system may lead to cost savings. The use of standard costs may cause employees to become more cost conscious and to seek improved methods of completing their tasks. Only when employees become active in reducing costs, then only can companies really become successful in cost control. Next, we have the limitations of standard costing. The first one is non-reporting of certain variances. Workers do not always report all exceptions or variances. If management only investigates unusual variances, workers may not report negative exceptions to the budget or may try to minimize these exceptions to conceal inefficiency. Workers who succeed in hiding variances diminish the effectiveness of budgeting. Next, low morale for some workers. The management by exception approach focuses on the unusual variances. Management often focuses on unfavorable variances while ignoring the favorable variances. Workers might believe that poor performance gets attention while good performance is ignored. As a result, the morale of these workers may suffer. The third point is applicability. It cannot be used in those organizations where non-standard products are produced. If the production is undertaken according to the customer specifications, then each of these jobs will involve different amount of the expenditures. The last point is, it is difficult to set standard. The process of setting standard is a difficult task as it requires technical skills. The time and motion studies required to be undertaken for this purpose. These studies require a lot of time and money. The last part under this standard costing that is to be covered is standard costing versus budgetary control. The first point of difference is basis. Standard costing is determined on the basis of data related to production, whereas budgetary control is where budgets are prepared on the basis of management plans. The next point is scope. Standard costing has a narrow scope, whereas budgetary control has a wide scope. The third is effect of temporary changes in conditions. The short-term changes will not influence the standard costs, whereas the short-term changes will be shown in the budgeted costs. The fourth point is concept. Standard costing is based on unit concept and budgetary control is based on total concept. The last point is applicability. It is applicable for manufacturing concerns and budgetary control is applicable for all business concerns. Thank you.